you go from this world of I'm going to give you cash, because the counter to this is going to be, well, we're going to have MMT, and instead of control print on just markets, we're going to control print jobs, right? We have Janet Yellen. I think, guys, you can pop that nice picture. We put CeCe Rouse right beside Janet Yellen, as you'll you might even giggle on this, but the reality is that those are two labor economists. One's from Harvard, and one on the right is from Harvard, and the other one's from Princeton. So what we're going to do, and we have the guy in the middle, the man in the tower in the middle is going to be the one that hits the print button. So what happens when you start to get into this part of MMT, which they quite literally want to print jobs, and they will use words. You used it first, but she used it, was interesting. I found it was interesting, not ironic, and it's obviously she's put there for Wall Street's reasons, but Janet Yellen's speech when she's like accepting this job is it was about having the decency of a living wage, of having a job. She's telling a story about her father and how she always wanted to do this for the people, blah, 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 blah. I'm sure she did at this point. She better. But the most important thing, Jim, is that they're going to try to do it. They're going to actually try to do the thing that you've been saying since the beginning of time. This doesn't end here. This experiment is going to go right to where it goes.
Well, one of the first of all, you're exactly right, Keith. I mean, Janet Yellen is not just a liberal labor economist, but she's what's called a frequentist statistician, which means more data, more data, more data.
Yeah.
She doesn't understand what to do if there's not a ton of data. New problems she just stares at she can't deal with them because she's waiting for more data. That's what frequentist statistics is all about.
Or a linear econ. A linear econ. Did you get called a linear econ? Not Jim Rickards, no.
Yeah, and so Janet Yellen is staring. All she does all day is stare at the Phillips curve. And of course, the Phillips curve is a flat line. I was very good at geometry, but I never remember a curve that was a straight line. I thought curves were supposed to be curved. But so she's staring at a flat Phillips curve saying, here comes the inflation any day. She doesn't understand velocity, believe it or not. She actually doesn't understand monetary policy, even though she was the head of the Fed. But she's in Treasury for a reason. Because modern monetary theory, and by the way, I know Stephanie Kelton in person, very nice lady, but man, I mean, one of the hardest things I do, one of the most painful things I do is read books of people I really disagree with. You have to. I mean, you just have to, widen the aperture and get out of your your little bubble. And so, cognitive diversity is my kind of diversity. So I've read Stephanie Kelton's book and her papers, and I know her, but. Man, is this not only wrong, but scary. So one of the first things they do is they say, well, here's the Federal Reserve. It's, technically the regional reserve banks are privately owned. Everyone knows that. There's a board of governors in Washington that kind of runs the thing. Everybody knows that. And here's the Treasury. The Federal Reserve controls money supply and interest rates. The Treasury borrows and spends. But what they do is they merge the two. They say basically take the balance sheet of the Treasury, which is the United States of America, take the balance sheet of the Fed, merge it, and they say that under no circumstances should borrowing capacity or interest rates be a constraint on spending. So the idea that you spend what you have, or if you don't have it, you have to borrow it or tax it, no. Turn it around. Spend first and then figure out the rest of it, as opposed to thinking about borrowing and taxing as a constraint on spending. Just spend whatever it takes. Spend, and every social need you can think of. And there's a long list: education, healthcare, childcare, et cetera. Just spend the money. And then if you have a deficit, too bad, just borrow the money. And if the bond market gets balky, the Fed buys the bonds, prints the money, and puts it on the balance sheet and waits to maturity. What's the problem? And when I first encountered this, I had to stop right there and say, well, what is the problem? Actually, that is how it works, and you can do that. There is no legal constraint on the size of the Fed's balance sheet, and other than debt ceilings, which are always waived, always rolled over, there's no constraint on the Treasury's borrowing capacity. And if the Chinese start dumping them, and you call Jamie Dimon and say, Jamie, buy some bonds, and if you don't, I'll put you out of business. So it doesn't appear to be a constraint. And so, but remember, she was chief economist on the Democratic side in the Senate Budget Committee when Bernie Sanders was the chairman,
right?
And the ranking member. She's the chief economic advisor to the Bernie Sanders campaign. And now that Biden is in, and Biden's not, all there, but his staff are going to run the country. They put Janet Yellen. Well, if you believe the Treasury and the Fed should be merged, what better way to do that than to put the former head of the Fed as the Secretary of the Treasury?
100%.
So this is a huge giveaway that modern monetary theory is now the law of the land, if you want to think of it that way. So we saw so we have $1 trillion per year baseline budget deficit. That was going into the pandemic, before the pandemic even came along. So Trump got us back to $1 trillion, kind of where Obama left off in 2011, I think was the last $1 trillion deficit. So you have $1 trillion baseline deficit. The Congress put $3 trillion on top of that in March and April and May through the CARES Act and a couple other acts. So now you're up to $4 trillion for fiscal 2020. Now we're in fiscal 2021. We just had $1 trillion, about $900 billion, that got done in the last days of the Trump administration. But now Biden's going to come in and do, they think, $2 trillion on top of that. So I mean, we're talking $6 trillion on top of a $2 trillion baseline budget deficit. $8 trillion of new debt in a $22 trillion economy. Our debt to GDP ratio it is already, I haven't computed it lately, but it's at 130. He's going to push 135% by the time they're done. Who's in that league? Well, I can tell you, it's Lebanon, Greece, and Italy. That's your lunch table, your four-person lunch table. So that's the club the United States is now in. Modern monetary theory says, don't worry, because it's all in dollars and we print dollars, so we can never run out of money. Therefore, we can never go broke. I think that's literally true.
It is.
But it doesn't mean that people want the dollars.
And it doesn't mean that it works.
It doesn't mean that it works. It does. And here's the bottom line, just to kind of put an end to MMT. There's no legal boundary. That's true. There's no accounting boundary. That's true. But there's a confidence boundary. It's invisible, hard to know. You don't know you hit it until you hit it, and then things collapse. People forget 1977, the United States issued Treasury bonds, Treasury notes denominated in Swiss francs. They were called the Carter bonds, but they were denominated in Swiss francs. People said, "We'll take your credit, but we don't want the dollars." And so we did, and we issued Swiss franc denominated Treasury notes. That's how bad it was in the late 70s. It seems like the ice age to people today, but I remember it, and we could get back there very quickly. But yeah, I think it's important for investors and asset allocators to understand that MMT is not a novelty. It's not a fringe theory. It's going to be the primary economic policy of the Biden administration. Stephanie Kelton's working behind the scenes. Janet Yellen's the front person. Who better? Because she can merge the Treasury and the Fed. Powell's going to do what he's told. So will the big banks. And here it comes. So get ready.